Money is an integral part of our lives, yet most of us are unaware of the reality of how it works. In today's environment, money is a powerful tool that can help us lead better lives, but only if we understand how to use it effectively. And like it or not, banks are the ultimate controllers of money. They have a near monopoly on the financial system, and they've designed it to work in their favor. The truth about how the banking system functions is pretty much hidden, and this works to the benefit of the banks. This doesn't mean that you should abandon banks altogether and start hoarding your cash at home. Or even worse, putting it in dubious financial schemes and scams. But knowledge is power, and with the right information, you can better control your financial future. Here are 6 truths about money that banks don't want people to know. Truth number 1. Money is created out of thin air. Banks don't need to have actual cash to lend money. They can almost create money out of thin air, which is a process also known as fractional reserve banking. This means that for every dollar deposited by an individual, the bank can create up to maybe $9 or $10 in loans. This process is legal, but it can lead to inflation and can cause problems in the economy if banks grant too much credit. It can also be a grave issue if loans are approved and disbursed indiscriminately. By the way, this was one of the root causes behind the 2008 financial crisis, where so-called subprime loans were given out to people who just didn't have the capacity to borrow that amount of money. If enough loans go bad, depositors as well as all the bank's investors can be in danger of being wiped out. This is why banks are required to set aside money or capital to cover loans that become bad enough to be written off. But the fact is that if enough loans go bad, even this capital buffer won't be enough to save a bank from toppling. And unfortunately, bringing their customers down with them. Truth number 2. Banks are not your allies. Banks are not particularly interested in their customers' financial well-being. It's a controversial and unpleasant statement, but it's true. Banks' interests are solely based on profits, and they will do everything legally permissible to make more money. This is even if it means exploiting their customers and squeezing more income from them. They offer questionable services such as high-interest payday loans and credit cards, cash advances and overdraft fees, all designed to make money off their customer base. But having said that, it's not as if they are more evil than anyone else. The simple fact is that all corporations exist first and foremost to make money. So banks are no different from any other large corporation, if you think about it that way. They answer to their shareholders, and shareholders simply want more profits. Once you internalize this, it'll be easier to understand why banks do the things they do. So forget the taglines you hear about improving communities or growing with their customers. Remember that banks are here to make money, and everything else is secondary to that. Truth number 3. Debt is a trap. Let's face it. Most of us have some form of debt, whether it's a student loan, credit card balances, or a mortgage. And while debt can seem like a necessary evil to achieve our goals or purchase the things we want, it can quickly turn into a trap if we're not careful. Banks love lending money because they make interest off of it, and the banking system has made it easy for people to get loans and credit. In fact, banks have legions of salespeople whose only targets are to get people to take up loans and credit cards. Their commissions are dependent on getting X number of credit cards approved, or Y amount of loans approved and disbursed. But what they don't tell you is that interest can quickly pile up and become unmanageable. Before you know it, you're paying a lot more in interest every month than you are towards the principal amount of the loan. And once you're in debt, it can be difficult to get out. Late fees, penalties, and higher interest rates can all contribute to an ever-growing balance that can feel impossible to pay off. So before taking on any new debt, think very carefully about whether it's really required. And if it is, don't be afraid to shop around multiple banks to get the best possible deal. Truth number 4. Savings accounts are not always good for you. Many people believe that the key to financial freedom is saving money. And saving is definitely very important. We've talked several times in other videos about how vital it is to have an emergency account, for example. But while saving is essential, it's not enough. Inflation will eat away at your savings, because the interest that you receive is almost always lower than the rate of inflation. As a result, that $5,000 current account deposit at your bank will reduce in value as time goes on, relative to its purchasing power. The flip side of this is that banks love deposits, especially current accounts and savings accounts, since they have such low interest. This works out as an extremely cheap source of funds, which they can then use to lend out and charge higher rates. Or they can invest this in other instruments, such as bonds or money market instruments, which can still give them some decent returns to boost their profits. If you do need to have a significant chunk of change saved in a bank account for liquidity or any other reasons, try to at least ensure that it's a high-yield savings account. Remember that as a depositor, you're the one who's lending the bank money. Would a bank ever give you a super low or zero interest loan? Clearly not, and you shouldn't do so either. Truth number 5. Many people don't pay attention to their bank statements. It's easy to fall into the trap of ignoring your bank statements. After all, they arrive every month, and they seem like a nuisance to deal with. But it's important to always take a closer look at them. Not only can you catch any potential fraudulent activity, but you can also see if there are any fees being charged without you realizing it. This behavior is something that banks use to their advantage. You might think that these fees are part of the bank's product or service that you've taken up anyway. But an example of this is a credit card annual fee. In many cases, getting the fee waived is as simple as a request to the bank to do so, or committing to a few transactions in future that you are going to charge to your card anyway. But banks will charge that annual fee regardless, knowing that a good proportion of customers don't take the trouble to scrutinize their transactions. So don't be part of this majority who are unwittingly fattening the bank's profit margins. Truth number 6. Banks make it hard to stop being a customer. In the last decade or two, you may have noticed that it's become ever easier for customers to open accounts with banks. This is especially so if you're an existing customer. Often banks can complete an account opening or a new card transaction with you, just over the phone. And of course nowadays, it's almost as easy for a new customer to start a bank relationship, due to things like electronic IDs, selfies, and other ways of verifying identity. This is generally a good thing, as improving access to banking and financial services is one of the best ways to ensure that the underprivileged aren't left behind. But you may have also noticed that it's not nearly as easy to end your relationship with a bank. If you want to close a current or savings account, even one that you open digitally, you often have to make your way to a bank branch to manually close it. This gives the bank a chance to try to persuade you to change your mind and continue as a customer. It's the same thing when canceling a credit card. When canceling a card, you'll often first be referred to so-called anti-attrition staff, whose sole jobs are to convince you to change your mind. Often by offering goodies such as temporary benefits or waivers. You can use this information to your benefit, as it gives you some nice leverage. By indicating that you want to close an account, you can extract goodies and benefits that the bank wouldn't have given you otherwise. It's a fact that keeping a customer by paying a little more is cheaper to the bank than going out and acquiring a new customer. You can always go ahead and close your account after these benefits expire, and you'll be no worse off. Check out these videos next to find out how to be good with your spending.